Hey traders, it's Danielle. Welcome to the free video. So tonight I'm going to be talking about TTD. For those of you who, pay attention to the videos, I talked about this one last Monday. That's because that's the time that I do the videos, once per week usually. Last Monday, however, it was a little bit different. We were talking about TTD, the trade desk, because it had a pretty good confluence of criteria. Number one, it had a solid pattern. Number two, it has high short interest. Number three, it has earnings coming up. And we had some consolidation. Well, as you can see, today it's exploding. It's up over 10%. It's making a brand new high. So it's a little bit difficult to explain, but you can look at it like this. Number one, last week when we talked about this, what it was a potential setup. You had the pattern, you had basically your recipe. So it's like if I was trying to make an apple pie, okay? And I've got my flour and I've got my cinnamon, and I've got my sugar and I have the pie pans, but I don't have any apples. And so you're sitting there and you're like, man, I would really love to taste that apple pie. I just need one more thing. You got to go to the store. You got to get your apples. Maybe you're going to get them today. Maybe you're going to get them in a week. You're not really sure, but you need that ingredient. Well, today, what happened with TTD, which is what was different from last week. Last week, we had the whole recipe without the apples. Today, here you go. Now you got the apples. So the main piece with the short squeeze is, number one, you have to have the setup. You have to have everything else aligning perfectly. But it's not going to come through until you have the key piece of the recipe, which is the catalyst, okay? The catalyst is the reason why the stock starts to explode. Now, the best part about the short squeeze is that when it makes a high, that's not when it stops. When it makes a high, that's when it keeps going even higher. And if you would like to look at an example, we have Tesla right here sitting pretty. It's basically just massive, crazy movement. And I doubt that TTD would be the same, just because Tesla's kind of like a unicorn move. But the point of the matter is, when it makes a high, that's when it goes higher, okay? Last week we had the recipe without all the ingredients. Now we have everything. So looking at this going into the close, the main reason why I wanted to get into TTD today was that we had a lot of volume and momentum going into the very end of the day. Signals that I was looking at, just to me, are one of my favorite patterns to look for a gap up the next day. So I did end up buying some more TTD, looking for a potential gap up into tomorrow. I have a price target here of anywhere between 320 and 340. So it's a pretty good range. The thing with these short squeezes is you don't know where they're going to end. You just follow the volume and momentum. So this is what I'm looking for in this name. If in fact we don't get a gap up and we get a little bit of a pullback, that would be an opportunity for me to add, because you have to remember that in a short squeeze, when it gets the best is when the shorts are losing the most money. And today, with it up 10%, I have to believe they're not feeling so hot about that. So the short squeeze is one of my favorite patterns. I'm going to be talking about it in a webinar tomorrow, February 5th, 2020 at 7 o'clock. You can sign up at simplertrading.com/sit, S-I-T. Not sure who came up with that, but that's okay. Makes sense. You're going to sit and listen to the webinar. Anyways, I'm really excited to go through this. A lot of people have asked about win rate. We're going to be talking about that. We're also going to talk about what helps you stay in these moves. So check it out. I'm really looking forward to it. I think this is, my favorite class that I've put together and my favorite webinar. So sign up. I'll see you there. If not, I'll see you in the next one. I hope you have a great rest of your day and good trading.